What's going on, everyone? My name is Nicholas Merton here at Data Dash, and today is March 13th of 2020. Well, folks, I hope you all are having a better day wherever you are, because quite frankly, yesterday was not easy for any of us in the cryptocurrency space, plain and simple. Yesterday, we had some of the worst recorded price action in the history of cryptocurrency markets. To put it simple, from the open of the market down to the lowest point that we saw yesterday in the sense of price action, it depends on what exchange you're looking at, we saw a drop of nearly anywhere from 50 to 53% in Bitcoin's price. And from open to close, we had the second worst recorded day in history, according to my knowledge, in Bitcoin's history, in the sense of the last couple of years that Bitcoin has been in existence. And for Ethereum, we had the worst price action we've ever seen on a daily basis. So this is a pain that's been felt across the board in cryptocurrency markets. And it's not just cryptocurrency markets. We've also seen it in traditional equities. For example, from the S&P 500 and the Dow Jones, we've had the worst week of price action in equity indices since back in 1987, back during Black Monday. So this has been a significant week in the sense of financial price action across the board in different markets. And I want to spend some time mainly focusing in on cryptocurrency markets today and trying to explain on a much more in-depth basis the three key reasons I believe this sell-off has actually occurred. I'm not going to act like I know the full story, guys. It is very clear with markets that, especially if you just go ahead and read the headlines, you're never going to get a full in-depth analysis of what's going on. But at the end of the day, it's a guessing game, guys. We have to have a decent assumption that we don't know the full story. But at least from what we have right now, I think we can get a very clear picture as to why we saw such a dramatic sell-off yesterday. Okay? So we're going to be talking about that. We'll also talk about the Fed stepping in and injecting over $1.5 trillion into repo operations that are going to be on a longer-term extension to help stimulate and continue credit markets through repo and the repo market to the banking sector. All right, so we've got a lot of things to discuss as we go throughout the video right after our quick sponsor. Our sponsor for today's episode is Ledn.io. For those of you out there holding Bitcoin long-term like myself, why not put it to work? Ledn has a suite of services to help you save, earn, and hodl more Bitcoin. Their B2X loan service lets you double the amount of Bitcoin you own through a Bitcoin-backed loan. Their savings account lets you earn interest on your Bitcoin, paid out in Bitcoin, so you can grow your holdings over time. And with their Bitcoin-backed loans, they let you access cash in a tax-efficient manner while keeping your Bitcoin under insured custody with BitGo and real-time proof of reserves. Get a 250,000 Satoshi bonus if you register with the link below and get a loan today. Alrighty, everyone, so let's go ahead and dive straight in here to taking a look at cryptocurrency markets. We can see over the last 24 hours, the only things that are up are stablecoins, and some of them are trading at pretty large premiums due to the need for cash at the moment. As you can see here across the board, most cryptocurrencies in the last 24 hours, practically all of them, even if you're looking from the top 100, the top 200, you're going to see double-digit declines here across the board. And this is just basically due to the fact that Bitcoin was selling off at a parabolic rate or an exponential rate yesterday. We can see here as well, if we take a look at valuations here over the last 7 days, we saw an overall 50% haircut across the board, really from the general range we were trading it here from March 9th to March 10th, dropping all the way from 226 billion down to 119 billion yesterday at the low, and now rebounding back to 153 billion. So we have seen a good bounce of relief here, but again, it only has bought us enough time to get back to where we were at the later part of yesterday, really around 7 o'clock under UTC time. So this is still very significant. I know many people are still probably hurting, and a lot of people are wanting some form of answers. Well, before we dive into those answers, I want to make it very clear, guys, to where I'm positioned in the market. A lot of you might be wondering, Nick, now that we've broken the 5-year-long wedge for cryptocurrency markets, or at least specifically in Bitcoin's price, and now that we're seeing, again, this big sell-off, one of the worst days of performance in Bitcoin's history, and all this global panic around all the different macro factors that are playing out, have you sold anything? Have you been taking any profit or basically taking any losses on your trades? And quite frankly, guys, no, I haven't been actively trading. I'm not logged into my exchange accounts as I've been here in New York and as I've been traveling. And really over the last few days, I haven't been doing any big adjustments to my account. The reason being is because during these times, right, you either have stops set or you're in this for the long term and you're willing to take the risk on your capital. Plain and simple, right? I have not been trading this market. I've taken probably just as big of a hit as anyone here during this time period. The good news is I've been exposed into a lot of altcoin positions, And that's going to be a topic that we're actually going to be talking about here because it was the first sign that made me feel something fishy was going on here that plays into the role of this sell-off, right? But I just want to make it very clear here, right, that I haven't been trading, guys. And it's important to understand that the dynamics here are going to change very, very much here in the sense of technical analysis. What happened here did not factor in TA whatsoever. Okay, I want to make that very, very clear here. TA was irrelevant. Technical analysis was irrelevant on this set of events here that came into play that led to Bitcoin having one of the worst sell-offs. And it's very similar to Mt. Gox in the sense that, or Magic the Gathering Online Exchange, which was one of the biggest exchanges for Bitcoin back in 2013 and previously beforehand. But we're going to be talking about how this dynamic that played out has completely reshaped the landscape for Bitcoin. Raoul Pal, for example, as you guys might know from Real Vision, put out a tweet here that showcased the next wedge here that we might be seeing Bitcoin go through. And quite frankly, I think that this is a much more relevant thing nowadays with TA because, quite frankly, we broke out of the logarithmic trend here, right? The logarithmic trend is done for, right? And now from this point on, this is what I would hope we can hold within here for Bitcoin to break out towards the next cycle. If not, I really don't know what that long-term formation is going to be on the logarithmic chart. We'll have to see. But again, a lot of people will propagate different points of TA. I'm not really here to do that today. I want to talk a lot more about what really caused this sell-off in Bitcoin. Let's go ahead and just talk about these rational things that could lead to such a dramatic sell-off. Well, it's a combination of three different things. First off, as we talked about yesterday, there is an overexposure of people trading on derivatives platforms rather than spot exchange. Now, if I were to ask many of you out there what exchange you trade on, I would assume many of you would say Coinbase, you probably would say Binance US, Kraken, Poloniex, whatever it may be. It depends on where you're from. Maybe Kraken and a lot of the other registered exchanges that are well regulated and trade what's known as spot exchange, which is where you're trading dollars, most likely for cryptocurrency positions such as Bitcoin or Ethereum, right? But the issue here is that you are in the minority if you're trading on those platforms. Now, I'm not saying you shouldn't trade on those exchanges. In my opinion, we need more people trading on spot exchange because we've had a very interesting phenomena happen where as people have gotten more greedy on gambling in cryptocurrency markets, as if the volatility we just saw wasn't enough, people have been taking margin positions on derivatives platforms in order to increase their risk and potential reward on cryptocurrency trades. So to, again, simply explain this, I'll get to the other points here very soon, guys, but I just want to make sure we're all on the same page here. For margin markets, in this case, for derivatives, when I take, for example, a 5x margin position, this means that I'm using borrowed capital to increase my risk, but also my potential reward by 5 times. So I'm taking on 5 times the amount of my actual underlying capital in order to reap the potential benefit of 5 times worth of the price action move to the upside, while also assessing 5 times the potential downside risk. And what this basically means is, if Bitcoin were to go up 1%, I would make 5%. And also if it went down 1%, I would lose 5%. And the issue with this is that you have the chance of liquidations. See, when you hold Bitcoin, it can go down to 0 and you can lose everything, right? But it has to go down to 0 for you to lose every single penny. Whereas in margin markets, if it were to go down, say, 20% and I have 5x leverage, then I lose everything. Plain and simple. So the more leverage people take on during these type of events where we get enough sell side pressure in Bitcoin, it leads to liquidations. It leads to people covering, not only on the sell-off side, but also when markets are going crazy to the upside and people are shorting and they're betting against the market on margin. You have what's known as a short squeeze, right? So this liquidation can lead to dramatic domino effects in markets. And this is coming at a time as well where we have a lot of other macro factors at play, right? We have one thing that's very clear, and this is pillar number 2, and that is obviously what's going on in traditional markets and global markets abroad. The continued fear across the spread of that's been going across the world. Again, YouTube would demonetize the video if I mentioned it, but you guys know what I'm talking about. The thing that everyone's talking about on Twitter, it's something that is definitely having a weight on global markets, and it's basically caused what's known as basically a cash squeeze in this case. That's what I would like to call it in this case to make it simple. It's basically meaning people are short of dollars, right? Global markets right now are having a major squeeze. We're seeing one of the worst performances in the S&P 500 and the Dow Jones. You guys don't need me to tell you that. You can see here on the daily performance, we've gone down on, for example, the S&P 500 just a couple of weeks ago from around 33 to 3,400 all the way down to 2,400 here on the index, right? We can see that. So people are short of dollars in this case, right? And this is applying some pressure here for people to pull money out of markets where they don't really need it. Bitcoin is right now, still to this day, as much as we hate to say it, it's a speculative market. So some people are going to be pulling out cash positions, right? So, and they're going to be taking profits in this case of Bitcoin and removing their money from these markets that may still be seen as quite risky. And I think that's going to be the case until we see the halving event and until we see negative yielding returns on bonds in regards to the treasury markets. And we'll talk about that a little bit later. Okay, so it's this cash squeeze, which is the second factor. Now, the big elephant in the room that no one is talking about, they were talking about it probably a week or a couple of weeks ago, is what I think really sparked this becoming the worst day in cryptocurrency price action. We've seen in the past that when it comes to exchange hacks, such as Mt. Gox, that when a hacker goes about stealing funds, right, it turns out in many ways that they're looking to get out as quick as possible. They're looking to liquidate those funds and cash in because they're criminals at the end of the day, right? They want to make their money and get out. They don't want to keep it in Bitcoin. Well, this is exactly what I think has caused the recent downturn. Not Mt. Gox, but Plus Token. We have been talking about this, not myself, I'm saying as an industry, we have been talking about Plus Token, the Ponzi scheme that stole over 1% of Bitcoin's supply and over, I think, 770,000 Ethereum, as well as, I think, millions of EOS as well. Tons of cryptocurrency from a scam in China. They have now gone about liquidating it. They've been spreading it out across multiple addresses on these blockchains, aiming to eventually get it onto exchanges and start liquidating. And so long as Plus Token can get a route to sell it on a liquid market with an order book, they will be able to sell, and they are going to sell in big chunks. I know too many people would say, look, okay, 1%, I wish I had 1% of the Bitcoin supply, but is that really enough to drag down markets as much as we saw? Yes, and I'll explain why. Because you've got the perfect cocktail for disaster here. You've already got a short squeeze on cash here in this case, and across global markets that's sparking a sell-off. It's already eating up the order book. But you've got a diluted spot market where there is no liquidity because it's all on derivatives platforms. And now you have Plus Token coming on to any order book it can get and clearing through the order book. Plain and simple. This is why we had the worst recorded price action in history for Ethereum, for Bitcoin, and for most cryptocurrencies across the board. And it's because Plus Token in this case, much like BitConnect and many other scams in the past, eventually have to exit. And once they find that exit, because there are a ton of offshore companies in the cryptocurrency space that will provide that exit for them, no matter if they're scammy companies or exchanges overseas who operate in the Cayman Islands or Seychelles or whatever kind of offshore place in the world that will service these kind of criminals, no matter what, they have money to sell. They have money to liquidate. 20,000 Bitcoin, in this case, has been moved around, now worth over 137 million. 790,000 Ethereum, my apologies, I missed it short of 20,000 ETH, now worth over 102 million, right? Liquidating on the market. Okay, so the values here probably have changed, but this was written back. The key point why I brought this up here is this was written back in December 16th of 2019. This has been a present threat to crypto markets for a very long time. It's already had a weighing effect here in the sense of crypto markets over the past, and we might be seeing the final exit here of Plus Token, right? Finally, it might be that they finally got their positions, they walked away with the cash, and now no longer they're going to not serve as a sell-side pressure for cryptocurrency markets. But with over 1% of the Bitcoin supply, I can tell you guys, this is probably the best explanation. There's not much of a reason for Bitcoin's price to go down this much, right? This is the only thing that would make sense to me. People who have an absolute incentive to get out of this market right now, right? So anyways, that's my point in the sense of crypto markets. To put it simple, guys, excessive amount of exposure on margin or derivative platforms and a lack of liquidity on spot exchanges Second off, a cash squeeze across the board in global markets. And third, the plus token Ponzi scheme being the ultimate domino that really sparked us having one of the worst days of price action in cryptocurrency history. Plain and simple, right? It's a good distributed amount of exposure or reasoning as to why we had such a bad day. It's usually never that there's one reason. And at the end of the day, all of these factors make sense to a degree, right? They're not some crazy conspiracy. We can follow on chain the movements of these funds. Plus Token has been preparing this for months, and they've been trying to get this money out of markets. And the moment that they get it, you can bet that they're going to take that opportunity and they're going to liquidate it as fast as possible, not caring about the slippage on the order book, but rather making sure they get their cash and get it out, right? So anyways, good news is here, it looks like Bitcoin is finally recovering. It looks like the storm is finally over, guys. This is the really good factor for me personally. I'm happy to see that even though we went down here to 3,900, right? It was a bloody day in cryptocurrency history, that we have gone all the way back up to 5,600, and it looks like buyers are realizing these factors. So it's good to see here. Now, this isn't the only place we're seeing a little bit of positivity in the sense of equities right now. Global markets right now rallying pretty good. Across most major U.S. indices, we're up anywhere from 3.5 to 4%. And other indices in India, Switzerland, and Russia all ticking up near 5%. So this is really good to see. We're seeing a little bit of recovery, and this is mainly due not only to, I think, just the dramatic sheer sell-off that we've had across the board for equities, but also the Fed doing its operations in repo markets. Now, I wanted to pull up this article from Slate because I want to make it very clear. Now, we've joked here in this case that the Fed repo operations are basically a form of quantitative easing. I just want to make it very clear, even though there is a lot of similarities, especially seeing as these operations of $1.5 trillion in repo markets are going to be on a 3-month extension. So not really overnight lending. But long story short, the Fed in this case is not conducting directly quantitative easing. It's doing repo operations. I just want to make that clear so you guys don't get confused and don't per se see a jump in the balance sheet for like what would be a normal QE operation, right? I have no doubt the Fed's going to jump into doing normal quantitative easing and that they're going to start repurchasing not only treasuries and mortgage-backed securities like they've normally done, they're going to probably start picking up equities. And heck, they might even start buying a little bit of Bitcoin. That's like a very far out there thing that some people have theorized. I think that's going to be a part of their portfolio once Bitcoin gets back up to 20K and tests towards its new highs, right? I don't think that's happening now. But to put it simple, guys, just wanted to share that. But it is a form of stimulus, especially with the 3-month operation here. This means that basically a ton of commercial banks are going to be able to exchange up to $1.5 trillion of treasuries in exchange for cash in the short term to keep the financial plumbing going and keep the economy from stagnating. Because if repo markets freeze, the whole system freezes, plain and simple, right? Now, all in all, guys, right, equities are recovering decently. We're seeing cryptocurrency markets do a little bit better here. And good news as well on our end, in this case, altcoins have been holding up quite nicely. But I want to go ahead here and talk a little bit about what's really gotten me concerned. Again, it's a thing I talked about nearly a week ago, and it's still the biggest factor I'm watching, even though I'm mainly exposed to crypto markets. I don't own a single government bond, but what's happening in treasury markets is what matters to me the most, and that is the yields on government treasuries, the bond of the United States, or the bonds for the United States. As these yields continue to decline in anticipation for the Fed to lower interest rates to zero, if not negative territory, like we've seen in Europe and Japan, this is going to be the thing to watch here. If yields drop below zero and start entering into negative territory, the ramifications for global markets, there's no way to contextualize it, guys. This will be the most significant moment in financial history if treasuries go below zero on their yield. If it turns out that when you have money deposited in a bank, the savings rate, which is already pretty much non-existent, starts to go negative. You start getting penalized for having your deposits in a saving account. This is the really scary reality that we're stepping into, guys. So, all in all, I want to make it very clear to keep an eye on this. Don't just care about cryptocurrency markets. Don't just care about what's going on in the S&P 500 and the Dow Jones. Watch what's happening on the 2-year yield, what's happening on the 3-month yield, the 6-month yield, the 1-year yield, and also on the longer term treasuries. I mean, you look across the board, guys, at the Treasury's website and just see how significant of a yield drop we've seen here just in the last week, week and a half. And compare, you can even extend it in the sense of, 2020, for example, in this case, and just see what was the normal change here, which was usually anywhere from, 3 or 5 basis points on a daily basis to the kind of significant volatility we're seeing here in the decline in yields towards a race down to zero. Anyways, that's it for the video today, guys. I hope you all enjoyed this video. If you did, drop a like. And I want to make it very clear. I think I've kind of emphasized this, guys. It's been a difficult week for all of us, but I'm here for you guys. I want to be here during the good times and the bad times. I'm always going to be producing content for you guys. I do it from the straight part of my heart here. I'm always going to be here for you all, no matter what, because I love what I do. And even when markets are having good days or bad days, I mean, this stuff is fascinating, guys. It's a fascinating market. There's always changing factors at play. And if you're going to be here for the long term, just know that I'm going to be here with you. And that, again, as I mentioned, I haven't been doing any crazy trading. I don't care about a point drop like this because, quite frankly, I was here when we were at 3,100 and I was here when we were at 20,000. I love cryptocurrencies. There's no other market, I believe, that's going to yield such a return over the next couple of years. And for that reason, I'm sticking to it. So I hope you all are having a great day wherever you are. And I'll see you all in the next video. Stay tuned.